Hi, my name is Jim Ripple. Welcome to day 2 of our video mini-series, How to Reduce or Completely Eliminate up to 100% of your income taxes. With those savings, build wealth and a tax-free retirement. Yesterday I told you that we were going to go over 3 different tax strategies. The first one today is only for business owners. Now, most business owners are paying for general liability or car insurance or those things to a carrier and deducting the premiums. But there's a lot of other risks that you don't probably even realize you have. How about business interruption or the pandemic? Loss of a key client, regulatory changes. All of these things can be harmful or even fatal to your business. Think of how many businesses went out of business during the pandemic. Well, there is a way to protect your business and at the same time decrease your taxes and build wealth. So how would we do this? We set up a reinsurance company that you own that's separate from your business. And what we do is we have your business analyzed to find out what types of risks that you may have that are insurable. Now, it may be 5 or 6, or it may be 26. It really doesn't matter. But once we figure that out, then you can set up a legitimate insurance company to protect those risks. So we pay the premiums from your business, which means it's tax deductible to your business, but the premiums going into your reinsurance company go in there tax-free because those are set aside for claims. But guess what? They probably aren't going to be claims all the time, so that money can be invested and you can build wealth with pre-tax dollars. So let's take a look at a business. Without a captive, a business making $500,000 will pay, at 40%, pay $200,000 in taxes. They get to keep $300,000. Okay, pretty good. But what if they had a captive? So now the captive is going to be, your business is going to pay premiums to your captive, which go in there pre-tax, but tax deductible to your business. So now instead of keeping $300,000, you're keeping $500,000. Now, should there be a claim? What you just pay from one pocket back to the other pocket. So it works out real well, but in the meantime, we're saving a lot of taxes. So this works for just about any type of business out there. Anywhere from probably 2 to 3 million up to unlimited, but billion or more in gross revenue. And depending on how many risks you have, you can take between 9 and 15% of your top line revenue as a premium paid from your business to your insurance company. So the typical premiums that we see are somewhere between $200,000 and $2.3 million. Now there's different structures. If you're larger than $2.8 million, we use different structures than if you're necessarily under that, because there's our regulation on some of the stuff. But just about any of these businesses, think of physicians, law, collectibles, construction, what about environmental things, all kinds of regulatory things that are going to affect them. So all these can be insured, but the likelihood of claims are not all that great. And guess what? You get to build that reinsurance company that you own, and you can invest the dollars that are there and grow your wealth. All of it tax-free. We kind of call it a golden egg that you're building separate from your business and allow you to build your wealth on both ends. So what does a captive do for you? It minimizes your insurance costs. It improves your cash flow, controls risks should you have a problem, and guess what? You get to build wealth. Not a bad deal. So let's take a look at a current company. $500,000 like we talked about before in retained earnings at the end of the year. $200,000 due in taxes at 40%. Now, cash available for investments is $300,000. At a 10% given return, you end up at the end of the year with $330,000. Not bad. But what if we did a captive? Now with the $500,000 in retained earnings goes into your insurance company. Again, it's just a different pocket, so no taxes are due. Now there's a cost to set up any tax shelter, and in this case, it's 15% of the premiums going in, so that's $75,000. So your net savings is $125,000. Now you have $425,000 in reserves sitting in your captive. We can't invest all of this because some of it has to stay relatively liquid so that in case we need to pay claims, we can pay those claims. But so we can take 80% of that and invest it. So that's $340,000 at, again, 10%. we're looking at a $34,000 gain, but you add the $34,000 to the $425 in total reserves, you're now at an equal at $459,000 or $129,000 more than you would have been without the captive. That's a 40% increase in retained earnings. So this is the first strategy of how to eliminate income taxes from your business and build a golden egg for your retirement. Now, tomorrow we're going to talk about another tax strategy, and that one will be able to be used by a W-2 employee or a business owner. So thank you for attending, and we look forward to seeing you tomorrow. Thank you.